Welcome to CMS Forex News. This is Alexander Shapiro. Today is Friday, May 2nd, 2008. In Australia, retail sales increased 0.5% in March after a dip into negative territory in February and flat sales in January. Retail sales in Germany undershot expectations and remained in negative territory at negative 0.1%. The annual change for March was negative 6.3%. This means that consumers are feeling less confident and less willing to spend as the effects from the global slowdown finally seep into the German economy and as inflation cuts into purchasing power. The Halifax Housing Price Index for the UK showed prices decreasing 1.3% for April and 0.9% on an annual basis. This is old news by now, as the downfall of housing prices has been evident in the UK for several months now, but will add pressure for more rate cuts from the Bank of England. Turning to the U.S., the big story of the day was April's non-farm payroll data. Economists forecasted a drop of 80,000 for the month and were pleasantly surprised when the economy showed that it only shed 20,000 jobs. Manufacturing jobs continued to suffer while the services sector improved. The results add evidence that the Federal Reserve will pause in its interest rate cutting campaign going forward. In a final release, U.S. factory orders increased 1.4% in March after an upwardly revised 0.9% decline in February. Increases in shipments, unfilled orders, and inventories were the main drivers of the stronger report. Coming into this week, investors and traders anticipated the Federal Open Market Committee to signal a pause to its rate cut campaign after one more reduction. Fundamentals also supported this speculation. As a result, the dollar continued last week's rally versus the euro. Following the jobs report, the euro-dollar pair hit a 5-week low on Friday, falling below 1.54. The pair is now about 600 pips off its all-time high set last Tuesday. The pound-dollar pair has been trading in a 350 pip range this week and is set to finish the week with the dollar stronger. The pair had its biggest move on Tuesday after data from the UK revealed that mortgage lending in the country had hit the lowest level since record-keeping began in 1999. The gridlock in lending has hurt the ability of potential homebuyers to finance loans, which contributed to the fall in prices seen recently. The dollar was also set to finish the week higher versus the yen, after starting the week lower. Thursday's session saw strong performance in U.S. stock markets, and better than expected payroll data boosted the dollar in Friday trading. Since April 10th, the dollar-yen pair has bounced off support at 100.50 and climbed close to 500 pips to set a high above 105.50 today. Other currencies used in carry trade, such as the Aussie and the pound, also increased today versus the yen. The US dollar-Canadian dollar pair will also close out the week stronger after the last 2 days of gains. The pair tested yesterday's high near 1.0240 after the payroll data, but gave up those gains and was trading near its session open as of 1 p.m. Eastern Time. Next week starts with data from Australia, including an important measure of inflation. On Monday, the U.S. will post its ISM non-manufacturing index. Later in the week, we get interest rate decisions from the Bank of England and the European Central Bank, along with employment figures from Australia, New Zealand, and Canada. That wraps it up for this busy week in Forex news. Join us next week right here at cmsfx.com.